Good afternoon, everyone. Welcome to After Hours with William in India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I would like to state the disclaimer is that whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily action taken from one of the major broker in India. This is a 10-minute candle. You can see Nifty opened on the positive note. In the first candle itself, it has made a day's high, almost around 18,400 level. However, there has been resistance at that particular level, and Nifty has succumbed to selling pressure. It has fallen shortly after that. As the session progressed, the selling intensified, and it almost touched, fallen more than 160, 170 points from the peak. But the last late 1 hour buying that happened post 2:15 time. This buying helped Nifty pay some of its losses. Otherwise, it would have been a major decline day for the Nifty. This has been the scenario in the last couple of sessions as well. Nifty has been highly volatile. There has been no clear momentum on either direction. If you look at the Nifty's daily chart, you will get a more clear picture what I am trying to say. You can see this week has been a cluster of trading days. You can see Nifty traded almost near 80,300, 400 and 200 levels for the whole week. If you compare with the relatively with the average trading range for the Nifty for any week, this week is very minimum. Also on the volume front, also Nifty's volume has come down sharply. Only on Monday the volume was slightly above average. Starting Tuesday, Wednesday, Thursday, and today also volume has been very high, very low, significantly low when compared to the average volume. And the price action also, there is no proper momentum on either direction. So overall the market is not going anywhere. There is no any major news happening in the market which gives push to the market in either directions. That is missing. Coming to the market direction, currently we are in confirmed uptrend. Last Friday, that is 1 week before, we have changed the market status to confirmed uptrend as the Nifty advanced more than 1.5% on volume higher than the previous session. This big blue candle was the volume made on Friday. Hence, we have changed the market status to confirmed uptrend, and we have been adding stocks to model portfolio since then. And prior to confirmed uptrend also, we have started adding stocks because of a major rule that is Nifty reclaiming the previous rally high, that is 18,100 level. So after Nifty closing above that particular level, we have started adding stocks to our model portfolio. And also during the week, yesterday and today Nifty fallen more than 0.2%, but the volume was on the lower side. Yesterday's volume was lower than the Wednesdays, and today's volume was also lower than the yesterday's. So on both the occasions, Nifty escaped distribution days. So current distribution day is still at 0. It's very important to track distribution in this kind of markets because the markets are not moving higher as of now. So in order to track the weakness in the market, distribution days help us. Accumulation of distribution days signifies that there has been increasing selling pressure in the market. So as soon as distribution day count increases to 3 to 4 or Nifty reaching their key moving averages, we would be changing the market status to under pressure. In such a scenario, our aggressive nature, that is while additions will come down, we'll be very cautious while taking fresh entries. Regarding the model portfolio stocks, we'll be very cautious again. We'll be looking out for stocks which are falling on higher volumes in order to safeguard profits in those particular stocks. That is related to the market structure. Coming to today's action again, HCL Tech has been a major outperformer among the Nifty 50 stocks, followed by another that is Hindustan Unilever, a major FMCG company, and Asian Paints also closed 0.9% higher. Infosys, which has been under selling pressure recently has been at has come into top 5 gainers for the session. Other major gainer is the State Bank of India, which has been advancing sharply recently. If you look, PSU banks have been rallying and they have been the consistent gainers in the last couple of weeks. On the decliners front, we have M&M and Bajaj Auto from the auto space, and two finance companies, that is Bajaj Finance and IndusInd Bank, have also fallen 0.6% lower. On the sectoral front today, except for PSU Bank, which closed 1.5% higher, this is majorly because of State Bank and other major PSU banks. Nifty Realty closed 0.1% higher. That is not so much of. But if you see this whole sectoral view has been red for the day. Even though the declines are slightly lower, less than 1%, apart from Nifty Auto, which closed 1.2% lower. All the other indices have closed pretty much 0.2 to 0.4, 0.6% lower, which is not a major drawdown. But if you look at the overall sector view on a broader perspective, the advanced decline ratio has been going towards the decliners. So the number of decliners have been increasing. That is not a good sign. Whenever the market is in confirmed update, we want broader participation. That is, majority of the stocks closing in the green when compared to the stocks which are closing in the red. Some of the stocks which are in the news and which have been highly volatile during the trading session are Strides Pharma has received an approval from US FDA for the potassium chloride oral solution. Another major company, pharma company, that is Sun Pharma, has received approval from again US FDA for Sezaby. This is used for neonatal seizures, that is seizures which happen in babies which are babies of age less than 1 month. This drug is used. Eicher Motors have appointed Vidhya Srinivasan as its CFO with an effective date of that is effective from today. Mahindra Life Sciences has launched a new residential project in Mahindra Citadel Phase 1. This is in Pune. Axis Bank has increased its MCLR rates by 10 bps. This is on various loans and various tenures. This is a major breakthrough because RBI has been increasing the repo rates consistently for the last 3 to 4 MPC meetings. So the banks like private banks and PSU banks have to pass on these rate hikes to the consumers as well, because their cost of funds have increased. So definitely their the loans should also earn more interest rates. Otherwise, there will be losses. That is the reason banks have been increasing their interest rates for the last 4 to 5 months. Every bank has increased their interest rates. So EMIs have been increasing, purchasing power will come down, and capex plans will come down definitely for the private companies, because of higher interest rates, their cost of funds will be on the higher rate. So definitely the growth will get impacted because of higher rate regime. This is a major reason why across the globe financial markets have been facing issues because of higher inflation, higher interest rates. The growth is getting hampered, and financial analysts are not able to predict when the inflation is going to peak and when we are going to see normal inflation rates. So there has been some dilemma in the global markets and even in Indian market as well. Even though Nifty is trading at almost near all-time highs, there is no clear momentum and there is no backing of institutional investors regarding the up move. AIA Engineering has advanced more than 3% today, and it has rebounded sharply from its 50 DMA, which is a red line here. So, which is an alternative buy point according to our own rules. And the volume has also been on the higher end, which is sharply above average volumes. On the ratings wise, the stock is looking pretty good. EPS of 85 signifies the fundamental character of this particular stock. You can see for the last 4 quarters, EPS have grown from 40 to 70, 100% consistently, and sales have also grown 30 to 60% on each quarter. This is on year-on-year basis. So these kind of earnings will definitely help any company to grow further, and price action has also similarly reflected. You can see the stock price has increased from 1400, 1500 levels to almost 3000 levels within a period of 7 to 8 months. So most of the parameters are looking good on Woody lens, and technically, fundamentally, everything is looking good on this particular stock. We are waiting for the stock to come back to its ideal buy zone, that is a blue highlighted range. As soon as that happens, we might add it to our model portfolio. That is the reason we have added the stock to buy watch list as well. So if you have this stock in radar, you can continue to hold it, and you can keep its 50 DM as a stop loss, because today it has found good support at that level. So today's low can be kept as a stop loss for the near term, that is for the next 2 to 3 sessions. Thanks for joining today's after hours. Have a good weekend. Thank you.